Hello friends, myself Dr. Dhaval Shah. I'm radiologist from Patan, Gujarat and member of profitfromit family since June 2020. Friend, today I'm going to present 9-month or quarterly result of 2021 and 22 by HAVELLS company. Friends, this company was incorporated in 1983 and it is the largest FMEG and consumer durable company with the influential pan-India presence and worldwide footprint. It was purchased by Haveli Ram Gupta and hence it was named as HAVELLS. The company was pioneered the company pioneered the concept of exclusive brand showroom in the electrical industry with the name of HAVELLS Galaxy. It has more than 500 exclusive brand showrooms across the India. It has penetrated in more than 50 countries. It has a strong dealer network of more than 10,000 plus. It has more than 40 branch offices, and total 14 manufacturing plants across India. Friends, this company has purchased many branded companies like Lloyd, Cartree, Standard Electrical, and Brio. It is very diversified range of products portfolio in switch gears, domestic switch gear, switches, industrial switch gears, and automation. In cable segment, power cables and flexible cables, lighting and fixtures, lighting strips, street light, solar light, and LED. In electrical consumer durables, fans, water heaters, small domestic appliances, water purifier, and personal grooming. In Lloyd consumer, air conditioner, LED TVs, and washing machines. There are total 18 listed companies in consumer electrical industry. Out of that, Havells, Dixon, Voltas, and Whirlpool are responsible for 80% of the total market cap. High growth, low debt, with highest market share in this industry and strong return on equity put this company in list of wealth creators. Friends, it is this industry has total market cap of 2.27 lakh crore. Out of that, Havells is contributing 36%, Voltas is contributing 18%, Dixon is contributing 13%, Whirlpool is contributing 10%, and other few companies like Amber, Blue Star, Orient Electrical, Symphony, and Hitachi are respectively contributing 5, 4, 3, 3, and 2%. Now about sales. Friends, total sales of this industry is 41,000 crore. Out of that, Havells is contributing 25%, Voltas is contributing 15%, Whirlpool is contributing 14%, Dixon is contributing 13%, Blue Star 9%, Amber 5%, Orient Electrical 5%, Hitachi 4%, HPL 2%, and Mark Electric 1.9%. First, now about profit. Havells is responsible for total 41% of the total profit. Voltas 22%, Whirlpool 13%, Dixon 6%, Orient Electric 4%, Symphony 4.5%, Blue Star 2.6%, and Amber is responsible for 2% of the total profit of this industry. Now about return on paid up equity. Friends, Havells has second highest return on paid up equity in this industry, and it is 16.6%. Now about net profit margin. Net profit margin is reasonably very good. It is 10%, which is also second highest in this industry. Now about debt equity ratio. So this company is almost debt free. You can see total debt equity ratio is 0.10. So almost it is debt free. Now about interest coverage ratio, or we can say debt paying capacity of this company. Interest coverage ratio of this company is 17.8. So it is reasonably very good. Now about Havells company. Friends, this is a bar chart of sales starting from 2001 to 2021 figures are there. We can see total sales was 171 crore in 2001 and it has gradually increased up to 10,450 crore in 2021, which is 23% CAGR on 61 times growth in 20 years. It is reasonably very good growth. Now about profit. Friends, in 2001, profit was 6 crore and which has gradually increased from 6 crore to 1,040 crore in 2021, which is 29% CAGR or 168 times growth in 20 years. Now about net profit margin. Friends, margins were low during initial years. It was 3 to 6% starting from 2001 to 2009. And after 2010 onwards, it has consistently a net profit margin was 9 to 10%. Now about reserve. In 2001, reserve figures was 19 crore and it has gradually increased from 19 crore to 5,100 crore in 2021. Friends, let's see about current trend of sales, profit and margin. Due to COVID, annual growth was 11% in sales, 42% in profits, and margins were 10%. So even during COVID time, 11% sales growth is reasonably very good growth. Again in Q1, sales has increased from 11 to 76%. Profit has tremendously increased from 42 to 69%, and margins were again reduced from 10 to 9%. Friends, you can see these are the very high figures of sales and profit growth. Actually, these figures are not real figure. We are seeing this figure too much hike as compared to annual growth figure, because these are due to low base of previous year's figure. Again in H1, sales growth was 48%, profit growth was 38%, so it is visibly in line, and margin was 9%. Friends, now about 9-month growth. During 9 months, sales growth has reduced from 48% to 34%, and profit has drastically reduced from 38% to 14%. Margin is 9%. So why this profit has tremendously reduced from 38 to 14%? Because due to increase in commodity prices, margins has drastically reduced. So profit is low. Profit growth is low. Friends, we can presume that again commodity prices may affect growth in coming quarter. Just estimated figures of profit growth might be 10% at the end of this financial year 2022, and sales growth figure might be 25%. Margin will be same, approximately 9%. Now about future estimates. Friends, after taking average estimated sales, profit and this EPS growth of 15%, the sales estimates might be 13,000 crore in 2022, 39,000 crore in 2030, and approximately 80,000 crore in 2035. Again about profit. Profit figure might be 1,150 crore in 2022, 3,500 crore in 2030, and 7,000 crore in 2035. Again, we can predict EPS figure might be 18 in 2022, 56 in 2030, and 113 in 2035. But it's about fair value. Fair value might be 927 in 2022, 2,836 in 2030, and 5,700 in 2035. Now about shareholding pattern. In 2021, promoters stake is 59.5%, which is highest. Second highest stake is with FI and FPI, which is 26.5%. Retailers has 7.7% stake. Insurance and LIC has 3.6% stake, and mutual fund have 2.5% stake. Friends, now about major costs there and growth. Raw material has 62% stake, and it has grown by raw material cost has grown by 61% during this quarter. Traded goods contributes 15% share, and traded goods cost has increased by 20%. Others have 12% stake in major cost, which has grown by 12%. Employee cost contributes 9% of the major cost. Employee cost has grown by 18% during this quarter. Depreciation contributes 2% of the major cost stake. It has grown by 3%. Advertisement contributes 2% of the major cost and it has grown by 131%. Again, finance almost 0%. Major this contribution in major cost. Inventory charges has grown by 670%. Now about segment-wise revenue growth. Cable segment is responsible for 33% of the total stake, and this revenue from this cable segment has increased by 47%. Electric and consumer durable has 23% stake. Revenue from this electrical and consumer durable segment has increased by 32%. Large consumer has 14% stake. Revenue from this large consumer has increased by 20%. Switchgear contributes 14% of the total stake. Revenue from this switchgear has increased by 32%. Lighting and fixtures has 10% total stake. Revenue from this lighting and fixture is increased by 27%. Others have 6% of the stake, and revenue from this other segment has increased by 24%. Friends, now about technicals. Friend, during this 20 years, stock price has rallied by 2200 times. So it has created huge wealth. Those who are holding this script since 20 years. You can buy this stock near 1000, and near term few month range might be 1030 to 1465, and this 3 years target might be 2200 rupees. Now about disclaimer, friends, this is a student's presentation only. We may or may not have investment in this company. Please invest your money after taking advice from your financial advisor. Thank you. Thank you from Profit From It family.